So we work with a lot of investment fund managers or people who want to set up a different type of investment funds. So I'm going to cover a little bit about the types of funds there are out there and how do you launch one? How do you start one? So let me share my screen real quick. All right. So what are the different types of funds that are out there? So I'm just going to cover the most commonly used terms. So you've got a venture capital fund. These are typically funds where venture capital, investors put their money in and they make smaller investments in very early stage companies. The fund itself, it's just basically the investment strategy is a little different. So they're usually going to pool money and put it into a large number of companies with small minority investments and spread it out a bunch, 10, 20 different companies, and hopefully one or two of them turn out big. Hedge funds. Hedge fund is just kind of a general term for typically where you pool assets, and most hedge funds invest in different types of securities, whether it's stocks, options, bonds. Some of them can be crypto, which I'll cover later. But a hedge fund is just a fund that uses a different type of strategy. And usually it may involve higher risk type of hedging with margin accounts and different options, like selling short and some other things that they might do in terms of their strategy. But a hedge fund can be anything that usually just invests in securities typically. Private equity fund. These are going to be more of the funds where they go in and they acquire companies to be part of a portfolio. So they'll take over a majority or all of a company and then operate that company typically. That's the most common scenario for a private equity fund, where they actually operate the company after they acquire it, and they'll have a portfolio of companies owned by them. And at some point down the road, they'll look to sell off that company and get a return on their investment for their investors. Debt fund. So basically, that's similar. It can have a similar investment strategy. It can invest in venture capital or in securities or typical private equity in private companies. That's just a term because basically they're doing debt investment versus other types of equity investment. A real estate fund, it's pretty straightforward. It's a fund where you pool your money and you invest into various different types of real estate assets. And then a crypto fund. You'll see a lot more of these now where people are pooling their money to buy various different types of crypto assets. Can be similar to a hedge fund, potentially, depending on what they're doing, if they're buying different tokens or currency. But that's basically, they're pooling their money to invest in crypto type assets. Now, mutual funds or exchange traded funds, these are not normally set up by initial investment managers. These are like higher level investments. They're typically publicly traded, registered. And these are the ones that you buy into that put their money into various different publicly traded companies. So mutual funds or exchange traded funds are a much higher level that most early stage investment managers would not be setting up. Now, how do you launch a fund? So I've broken it down into basically 4 categories, and different people have different opinions on what you do first. Obviously, you need a team. You need to gather a team. You want to have someone who understands operations, day-to-day business of whatever business you're doing. Someone who helps raise capital, deals with investors, maybe someone who's good in finance. So you usually need 2 to 3 main people, if not more, as part of your core team, because obviously, you can't be a jack of all trades and run a fund. You have somebody who runs the fund, somebody who raises money, somebody who actually operates the underlying business or does due diligence to find the assets. Those are all different types of skill sets. And you need a business plan. So what type of fund are you going to do? What type of investments or assets are you going to go after? Is it crypto assets? Is it real estate? Are you going to do more like a hedge fund? How long is the hold period? How much money do you need to raise? Some of the basics of what your fund is going to look like and what your plan is. You need to come up with that. The setup, the corporate structure, the offering documents, PPM, operating agreement, figuring out who your fund administrator is, your accountants, if you hire auditors, that can usually be done a little bit farther down the road, because you want to make sure you have a good business plan, start getting a team together before you start spending a lot of money and time on setting it up to make sure it's actually going to be viable. And then you also need to find the deals. So if you don't have a huge, like if you have a huge track record, you've been on Wall Street and you've created 10 different funds that have had, huge success, then you can use that track record and you can probably go out and start a fund and raise capital immediately before you even have deals lined up. Most people need to have a pipeline of deals to be able to start a fund. So if you go to an investor and they say, okay, I'll put my money in here, but what are you going to invest in? Well, here's some investment criteria of what I'm going to look for. But most investors are going to want to see that you already have some good deals lined up. That'll make your fund a lot more attractive to a potential investor. So if you have that pipeline or even 1 or 2 decent deals lined up already, that's going to make it much easier to raise capital unless you've got a very long-term track record and this is your 10th fund and all your LPs already know you and they're just going to assume you're going to do well with the money. So that's just kind of a quick overview of some of the steps to launching a fund. Thanks for watching, and feel free to contact me with any questions that you might have.